That is a little different viewpoint that we have here at Matterhorn, or that we really dive in with our clients, is looking at that gap between the top line revenue and the real revenue, and how we can increase the real revenue. Hey everyone, welcome back to the Matterhorn Business Development Channel, where we're talking all things profit first, sales, and business management. We are certified profit first professionals. So my name is Abby Johnson. This is our CEO, Greg Winteregg.
Her father.
My father. That was terrible. So today we're going to answer another frequently asked question about profit first, or if you've maybe gone down a rabbit hole of videos about profit first and just looking to learn some more details. There's a principle or a number that is very important in profit first called real revenue. So we're going to define what real revenue is and how you can actually increase your real revenue. Some tips for that.
And we probably should throw in at this moment, if they haven't seen the first video, they should watch the first video. This will probably make a little bit more sense, and you're going to put a link
right there.
Up here.
You're right.
Okay,
yes.
Good. You can teach an old dog new tricks. I'm catching on to this whole high-tech thing.
So what is real revenue?
Okay, so first of all, maybe some know this, some don't. I graduated from dental school in 1981, and revenue was what? Well, revenue is income. So revenue is money in. So when we say revenue, we're talking about money that goes into the checkbook. Now, some people will call it gross income. Some people call it total revenue. There are several different terms, but just think with how much money went into the checkbook. That's the total revenue.
Right, and in this case, in profit first methods, you would have an income account, and all money, no matter what it is, goes into that one account.
No matter what source it came from, checks, credit cards, cash.
Right.
It all goes into the same account, which you're probably already doing right now. And where things start to fall apart is you pay all your bills, and then you add a new computer or this or that, and then there is no profit. So in the profit first system, basically what you're going to end up doing is taking a percentage out for profit before you pay your bills. But now what is that number that you're going to take your percentage out on? So today we're going to talk about the difference between total revenue, total income, and real income. So why don't you explain how we get from that total income number to the real revenue, like what you're going to be basing your profit percentages on? Right,
so you're taking out materials and subcontractor costs, and then that is how you get your real revenue number and where you make your percentages and allocations from. So the simplest way to explain real revenue is to use a contracting company as an example. So let's say that contracting company brought in $500,000 for the year. So to get to their real revenue number, we take out all of the cost of goods, which for us and for our purposes is materials and subcontractors.
Right, so the $500,000 of income, maybe it was $200,000 to buy the cabinets and the paint.
And the workers, like that, you had to subcontract a plumber out to do some work and all that. So what did you say? 200?
Yeah, 300,000. Right. So they brought in 500. It cost them 200,000. So the real revenue is 300,000.
Right, and then that's how you know what percentages you should be taking. That's the other side of, and why you need to know your real revenue number is there's a chart in the book that shows you what your ideal percentages should be, what your goal should be for how much profit owners pay, all of that jazz. So that $500,000 company is actually more like a $300,000 company, which in this case doesn't change which column they're in for our purposes, but it could. A $3 million company with $2 million in materials and subs is really a $1 million company. So if you're taking 10% profit, you're taking 10% of the 1 million, not the 3 million.
Right. And just so we're not confused, your accountant will call this cost of goods sold.
Right.
it's basically what does it take to produce the product or service.
Right.
So in a construction company, this is going to be your materials and your subs. It can be maybe you have a job and you're not going to do it and you're going to like give it to somebody else. And there are more specific details in here, but just think with what does it cost me to produce the product or the service? And it's more for a product industry than it is a service industry.
Now, I do have an example for a service industry,
Go ahead.
though. I have two examples I want to give here.
Okay, good.
Because the other piece of information about this is if your cost of materials and subcontractors is less than 25% of your total revenue, then you don't need to worry about separating it out for profit first purposes. So an example, though, of a service industry is we were talking to someone who has a market research company.
Yep.
So she does lots of survey research, and all of her surveyors are 1099 contractors.
Yep.
So for her purposes, if she has, I didn't know her revenue ranges, but if she had a certain revenue range, but 50% of that is actually going to pay out the people doing the actual surveys, then we take that other 50% and then we would do our percentages and allocation.
Yeah, so let's stick with 500,000. So let's say her company did 500,000, but she had to pay surveys 250,000. Then her real revenue would be 250,000, and then she's going to start setting aside a certain percentage.
Right. Right.
So then, let's say it's 5% profit in her case.
Right.
It's going to be 5% of 250,000, not 5% of 500.
Right. Now, the other example I wanted to give was a painting company that we were talking to. And I kind of assumed like, oh, they're painters. We totally are going to need to take cost of goods out. But when we ran the numbers, it was actually the paint and rollers and all that was really only 10%. It was actually pretty low. So for their purposes, their total income was the same as their real revenue. We didn't separate out the cost of paint and everything because it was less than 25%. And there is more reasons about why, and the actual chart of percentages is in the book, so that's why you should definitely buy Profit First. But I wanted to give those other examples so you could see different scenarios for different industries.
So then it's really interesting. You have to think with this when you're looking at how big of a company you have. You know, you can kind of pound your chest and say, I've got $1 million company, I've got a $5 million company. But if your cost of goods and subcontractors is half of that or 35% of that, your company really isn't that big. And you have to start taking a look at those percentages and how they factor into employee percentages, and not just profit percentages, but what percentage is your rent of your overall real revenue. So this is where these numbers are very important, and you have to learn how to extract your cost of goods sold.
Right. So then I want to talk about really quickly before we wrap up, just some things that you can do to increase your real revenue, because a lot of times people talk about the top line and total revenue and just get money in. But especially if you're in the contracting industry, more income doesn't always mean more profit or more real revenue. You could totally eat it on a job and only make like $1,000 of real revenue. So some things that you can do is obviously look at your cost of goods and try to get those costs down. We're working with a couple different restaurants right now, and you know, in the book, he talks a lot about looking at operating expenses, but we're talking about look at your cost of goods, look at your food costs or your supply costs, and how you can, you know, buy in bulk and get a better discount and things like that.
And that lowers your cost of goods sold.
Right, which means your real revenue is higher, and that means your profit percentage is going to be higher. And then the other thing is to obviously increase the top line, increase sales. You know, here at Matterhorn, we're all about that. Neil is our sales guru. You're a sales guru. We have a lot of videos to help you with sales, and that's a pretty obvious thing. But I just wanted to point out that is a little different viewpoint that we have here at Matterhorn, or that we really dive in with our clients, is looking at that gap between the top line revenue and the real revenue, and how we can increase the real revenue.
Exactly. How are we going to get that real revenue up so that we can start to fill these accounts faster?
Right.
And expand the company at the same time we're taking our profit first and monitoring all the other expenses.
Right.
Yep.
All right, so if you have any questions, leave them down below, or our contact information is below. We also have a free download of the first couple chapters of Profit First, so click the link below to get that, and we'll see you next time.